The software world is currently in a valuation bloodbath. If you've looked at your portfolio lately, it's not pretty. The AI revolution was supposed to lift all boats. Instead, it's created a massive identity crisis for tech giants. Adobe is down nearly 60%, Salesforce has been cut in half. ServiceNow, the enterprise darling, tumbled from its peak of $239 down to nearly $100. Is this the death of the software-as-a-service model? Or is this the greatest sale of our decade? Today, we're doing a deep dive into ADBE, CRM, and Now. I'll tell you why ServiceNow is my top pick for the best risk-reward coming out of this crash. Let's look at the scoreboard. Salesforce hit a high of $365. Today, it's hovering around $185. It's cheap, trading at 15x earnings, but growth has slowed to single digits. It's becoming a value stock. Adobe is the heartbreaker, from a peak of $635 down to $262. The market fears AI tools like Sora and Canva will make pro software unnecessary. Adobe has the tech, but they have a massive target on their back. Then there's ServiceNow. After their 5-for-1 split in late 2025, the stock was sitting pretty at $239. Today, it's around $103. That is a 57% haircut. But here is the kicker. Unlike the others, ServiceNow's fundamentals aren't just holding steady, they're accelerating. So why is Now my favorite pick? It comes down to the workflow mode. Adobe sells to creatives, Salesforce sells to sales teams, but ServiceNow sells to the entire organization. They are the plumbing of the modern corporation. When a company wants to deploy AI agents to handle HR requests or automate IT tickets, they use the ServiceNow Workflow Data Fabric. In their last earnings, they grew revenue by 21%. Compare that to Salesforce at 9%. ServiceNow isn't just adding AI as a feature. They are becoming the operating system that connects all the other AI tools. Let's talk about the math of the recovery. At $103, ServiceNow is trading at its lowest valuation multiple in years. For it to get back to its previous peak of $239, the stock has to go up 132%. Why is this a better risk-reward than Adobe? Because ServiceNow doesn't have a threat problem, it has a price problem. Adobe is fighting an existential war against AI-native rivals. ServiceNow is the AI-native rival. They are eating the lunch of legacy back-office systems. Management just authorized a $5 billion buyback. They know the stock is on sale. When the market stops panicking about SaaS dying and starts looking at who is actually making money from AI, ServiceNow is the first name they're going to buy back. Look, the Software-mageddon of 2026 is painful, but it's creating a massive opportunity. Salesforce is for the safe, conservative investor. Adobe is for the person who believes the pros will always win. But ServiceNow, it's the perfect blend of high growth, essential utility, and a massive 57% discount from its peak. I'm betting that ServiceNow hits $200 before Adobe hits $500. But I want to hear from you. Are you buying the dip on Now? Or do you think the software era is over? Drop a comment below, and don't forget to hit that subscribe button for more deep dives. I'll see you in the next one.